Maybe we'll start at a high level, Brendan. You think about that U.S.-China relationship. I'm curious, Brendan, as we now roll into this new year, into 2026, over the next 12 months, Brendan, how do you see that relationship evolving, Brendan, and what do you think it means for the Chinese economy, Chinese equities?
Yeah, I think first and foremost, happy holidays, Josh. Thanks for the opportunity. I think 1.4 billion people in China wake up every day not thinking about the United States. They're waking up thinking about China's economy, and I think they're going to take the lead off. We've got the draft of the 15th five-year plan was released in October, really emphasizes domestic consumption and technology self-reliance. That's been followed by the Central Economic Work Conference, as well as more recently, President Xi released an article in a magazine talking about domestic consumption. So we as investors, we know, similar to investors in China, that's the two areas we really want to be focused on in 2026, domestic consumption and technology.
Let me ask you about the K-Web, Brendan. So we're up around 20% this year. How would you generally characterize valuations here?
So the K-Web companies are really offshore Chinese. So these are Chinese technology companies listed in Hong Kong. Those companies are very, very undervalued relative to their U.S. counterparts. These are companies like Alibaba, Tencent, JD, Meituan, Trip.com, et cetera. So we still think there's a real value opportunity in these technology companies listed in Hong Kong. That is going to be somewhat dependent upon foreign investor flow, something that we've seen start to percolate in 2025, which we think will continue next year. Based on some of the things you've been talking about, weaker dollar, that's kind of forcing some foreign investors out of U.S. equities potentially into growth stocks listed in Hong Kong like we hold in K-Web.
Brendan, there was this new report in the Journal. I want your take on it. I don't know if you saw this one. I'll read you the headline. It said, China's sprint for tech dominance can't hide an economy full of holes. The article is about how China is closing the gap with the U.S. for global tech dominance, Brendan. But the Journal goes on to say here, big parts of its economy are a mess. Their words. Curious just to get your take on that, Brendan. Does that kind of align with your view?
Not necessarily. I mean, I think no one's going to say that it's all rainbows and unicorns in China today. At the same time, they're growing at 5% GDP growth, so it's not all bad either. As well as I think, Josh, if you think about this narrative that China's going to fall off a cliff, I mean, how long have we been hearing that? I mean, how long have we heard China's about to invade Taiwan? I mean, Taiwan, it's been 76 years. That's 27,740 days China's not invaded Taiwan. So I think at some point, investors need to become a little skeptical about some of this always negative media reports and basically look to resources more data-driven like we tried to provide here at KraneShares.
Would you expect next year, Brendan, do you think that the CCP, would you expect Chinese authorities to offer and inject more stimulus into that Chinese economy next year?
I think we'll continue to see targeted stimulus. We're not expecting any bazooka-style stimulus like we saw arguably in September of 2024. But I think you're going to continue to see support for around domestic consumption. They do a lot of subsidies. They obviously want to avert a housing crisis, so a lot of attention played there. But then I also do think maybe a little bit of a sleeper is, could we actually see better U.S.-China relations with a Trump-Xi summit coming in April, as well as the APEC conference is actually going to be in China in the fall of next year. So you arguably have multiple opportunities for Trump and Xi to meet. And I just really believe that maybe the market underestimates the potential for better U.S.-China relations.
Why, Brendan, speaking of U.S.-China relations, why do you think Trump decided, you know what, he's going to allow Nvidia to export those H200 chips to China? I mean, was it because, okay, Uncle Sam's going to get a taste, Brendan? Is it because Trump thinks, hey, for now at least, Xi has leverage when it comes to rare earths? What's the reasoning there, do you think?
I think President Trump, he's not a career politician. He's been a business person. And I think he looks to corporate leaders as almost like a shadow cabinet, where I think he wants to meet and hear the views of, if it's Tim Cook or Jensen Huang or other corporate leaders, as we've seen earlier this year, that after the CEOs of Walmart and Target and Home Depot met with him, the tariffs were kind of de-escalated. So I think President Trump is unique in that he does listen to corporate leaders, and I think Jensen Huang, arguably said, this is really, really critical for Nvidia. But at the same time, I also think Chinese companies want Nvidia chips. So why would you turn your back on that revenue opportunity?
Well, and here, Brendan, on this great AI race, AI hardware, AI software, who, in your opinion, Brendan, still is in pole position, still is in the lead? Is it the U.S., and if so, how long do you think?
I mean, certainly, using Nvidia as Nvidia is very, very far ahead of its Chinese equivalents. So I don't think there's any catch up on a Blackwell-like chip coming from a Chinese competitor anytime in the near future. I think the two countries, and really ultimately the underlying companies, are looking at AI very differently. In the US, it's really about an enterprise sale from Anthropic or OpenAI, really. In China, the large language models, those are open source. They're literally basically free. There's no moat to a lot of these large language models in China. Where the revenue is coming in is going to be on the cloud computing, and that's where Alibaba, Tencent, and Baidu really are going to be the main beneficiaries of AI via cloud computing.
Brendan, always great to have you on the show. Merry Christmas.
Yeah, likewise, Josh. Thank you so much.